Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Whoa, that's a lot of news to digest. Welcome to Bazaar Morning Call. I'm Lata and with me is Sonia. Well, it's been such a hectic last 24 hours and it's going to be an even more hectic next maybe 18 hours till sunset. So many earnings. For starters, the global cues are practically stable. I don't think they're pushing us this way or that. If you looked at the dollar index and at crude, they're largely around where they were yesterday. Dollars maybe a tad stronger. Crude is just about where it was. So we really have only domestic cues to worry about. And in that, what's new for us? New for us is ITC numbers. And clearly they are a tad better. Looks like the calculated volumes are higher than what the street was budgeting. So that might give it a push. And then it's Reliance numbers today. That always keeps the street a little excited, especially because now that Jio is an earner for the company. That may also keep the street a little cheered. But most importantly, it's the finance piece. We saw it absolutely run. And finance is such a giant in the Nifty and the bank Nifty that it can carry the market on its shoulders. 40% of Nifty earnings. So if they are cheered, and today you're going to get ICICI and Bob numbers. Yesterday they already saw a fairly decent rally. So it doesn't look like they lose at least. You know, they can't put on that much weight maybe. But again, looks like that set also will be higher. And today is the first day of a new contract. That usually keeps the bulls a little cheered because there's a lot of time. And they have a very good contract. They've put a hefty contract behind them. Chances are today the bulls are starting with a very big advantage. Your thoughts, Sonia? Good morning.
Hi, good morning. Yes, that's the theme that's playing out globally, right? Strong earnings resulting in good equities. You spoke about ITC. I mean, ITC is not alone. It has so many companies for company today.
Yes.
So whether, you take a look at Bharti's numbers after a long time, I think both Africa and India have done well, at least not as bad as expected. Biocon was good. I think what was most heartening was the Midcap NBFCs, very strong numbers coming in. Of course, the likes of Chola, etc. were expected. But even, if you look at something like a SBI Life, Bharat Financial, decent showing from this entire pocket. And, even X of the NBFCs, whether it's Petronet, LNG, Concor, and Prakash Diwan was making this point yesterday. This quarter, we were expecting the mid-caps, non-index, large caps to do badly, perhaps some negative showing. But the numbers have actually been quite good, quite heartening. So I think that's something that the street really likes. If you look at the FII numbers as well yesterday, massive buy figure, almost 2,500 crores. So, Lata, do you think the stage is perhaps set for some broadening of this market participation?
Largely, I mean, you put your finger on the right keys, as it were. The FI number usually on the last day of contract winding up tends to be high. That's more because of adjustment of the contract positions. So we can keep that aside. But otherwise, earnings-wise, I think this quarter, the finance earnings clearly separate the men from the boys. I mean, you can see the Shriram Transport. What a number yesterday. And Chola, likewise, coming after market hours. That didn't mean that all financials did well. There were some finance stocks, LVB, not a great performance. So you can very clearly see that some of them who have taken their problems and gone ahead and resolved them have really come out. And Bharat Financial, we only got the top line, bottom line. Now we have the details. There's a substantial reduction in their stressed assets.
Yes.
And now growth also is, returned with a vengeance. So the fine print is actually showing that a lot of the finance stocks are doing exceptionally well, as you've pointed out. So clearly mid-caps have a good thing going today. It looks like the stage is set, but of course, technicals of the market will rule.
And also on ITC, we're finally seeing some growth in cigarette volumes versus the degrowth earlier. Not great for the health of the consumer, definitely, but great for the health of the shareholders, perhaps. All right, on that note, it's going to be a long day today. We have Reliance at the end of the day, and of course, through the course of the day, many, many numbers. Let's take a look at what our wise experts have to say as we head into trade this Friday morning. Christopher Wood of CLSA says the risk for Asian markets is another US dollar surge. He says greed and fear is hoping this will not happen, but the key word is hoping. Asian central banks would certainly not want to take this for granted. Chris says investors should build in the risk of more monetary tightening, most particularly in those markets which share the double whammy of being oil consumers and running a current account deficit. for India, he says the latest inflation data has maintained expectations of more tightening from the Reserve Bank. He says the same applies with the populist decision announced on Saturday to lower GST rates on 88 consumer items.
Okay, I don't think the market's now worried. Yes, central banks worry about some day when dollars will move out because of the Fed's tightening. But at the moment, the market's clearly looking at it as a confirmation of growth, and that is why global central banks are tightening, not worrying the market now. So let's get you some money market views on that note. Bhaskar Pand of HDFC Bank says the dollar has remained more or less stable overnight, says ECB Chief Draghi indicated he will keep rates unchanged through summer of 2019, bringing pressure on the euro. He expects the USD INR pair to trade in a range of 68.70, 68.90. It should be an uneventful day for the rupee market.
Okay, let's find out if any eventful moves in the bond market or not. Bhaskar Panda says as far as Indian yields are concerned, the 10-year benchmark bond yield is adjusting down a bit. He expects it to remain within the range of 7.75 to 7.80%.
It has a good thing coming from crude, and therefore you have seen yields move from the late 80s and even early 90s, that is 7.79 thereabouts, all the way down to 7.76. But to get a better grasp of all the Facebooks and the Amazons of the world, Nigel here for the World View.
Well, overnight, the Dow did well. It ended with a century. But as you said, Facebook was under pressure, and that's precisely the factor that dragged the Nasdaq lower. In fact, the bears poked Facebook overnight. It lost 100 billion in terms of market capitalization. Here in India, we have only two companies that have market capitalization of around 100 billion. In the first hour itself, 100 billion was taken off Facebook. But today, the Nasdaq will get supported because Amazon came out with its set of numbers, and that looked pretty good. The stock ended down closer on 3% overnight, but in post-close, it was up 3%. So that's one factor that will support the Nasdaq in today's trading session. And if we're looking at the FANG stocks, well, we have two stocks that did well and two misses are there. Amazon, as well as, you had Alphabet that beat estimates, while in fact, Apple will come out with its set of numbers, and that will really settle the score for those FANG stocks itself. But moving forward to the European markets, they did well overnight. We had all the three frontliners that ended well in the green. The ECB decided to keep interest rates on hold, but really those markets were reacting to news that came overnight that both sides of the Atlantic, they're going to be moving ahead and they're going to be removing all those trade barriers. Well, you had auto stocks that were the best performers, up 2.5%. But this morning, Asian markets more or less mixed. Some of them have come off the high point of the day. The SGX Nifty as well was indicating a more or less a flattish start. Remember, you have the dollar index as well as Brent crude prices more or less stable overnight.
Okay, thanks a lot for that, Nigel. So that's about the global markets. But back home, we told you first, and now it's official. Hindalco's US-based subsidiary Novelis has agreed to purchase Aleris Corporation. The $2.5 billion acquisition will give the Kumar Mangalam-led Hindalco a larger footprint in North America and in Europe. Nisha Poddar, our colleague, spoke to Kumar Mangalam Birla and began by asking him if it was the Novelis acquisition that gave him the confidence to go ahead with the Aleris transaction. Take a look.
Novelis is a very valuable company today. It's, to our mind, valued at between $10 to $12 billion. It's also a global leader. It has consolidated its leadership position globally in the last 10 years. Very profitable, and it's a prized asset in any which way that you look at it. I think Aleris is a step forward in the Novelis story of increasing Hindalco's share of value-added products in its product mix. Aleris takes that ambition forward. It gives Novelis a foray into some new segments. For example, building and construction. For example, very interestingly, aerospace. So in aerospace, it gives Novelis access to customers like Boeing, like Airbus, like Bombardier. So you have very sort of revered marquee customers that also come in terms of franchises along with Aleris. So absolutely, I think the success of Novelis has been very encouraging, and that is what has spurred us to now take the next big step forward with Aleris.
How long has it been on your mind to buy out this company? What has been the process taken? And what made you zero in on this asset?
So, like any other acquisition, I think that the idea was to enhance the value-added product portfolio, to get into some spaces where we didn't have a presence, like I said, auto, for example, aerospace, for example. Aleris is known to be a very high-quality asset. I think the valuation is very reasonable, if not on the lower side, if you look at other transactions in the space. It also has 13 very high quality, high technology manufacturing centers across the US, across Europe and China. So great asset, great quality. It is accretive from the first year itself, both in terms of net profit, free cash flow. So I think as a package, it's a very attractive transaction.
Of course, this brings in a lot of strategic benefits. It's a strategic fit to Novelis. And also with this, Novelis is getting into more high-end and high-margin product segments as well. But what is the kind of synergistic benefit that you're going to gain in terms of numbers from this? And when is it going to start kicking in on your balance sheet?
So several synergistic benefits. For example, on SG&A, for example, on supply chain. Also, both companies have a complementary set of assets in China. So it deepens and enhances the Asia play. Right. And as you probably know, Asia is the highest growing market at 14%, which is very attractive for aluminum, especially in the auto segment.
Yes.
Other than that, I think you have synergy expectations of about $150 million yearly on a recurring basis. And this is not taking into account synergy on account of auto. So very attractive again.
Okay, that clearly was the big story that dominated for the past 2 or 3 days. And remember, it was all credit to Nisha Poddar. She told us 8 days back about the story and practically got every detail right. Well, one detail which we got yesterday was the kind of EBITDA that Kumar Birla is expecting from Aleris a couple of years down the line. If you worked with the historical $201 million US dollar EBITDA, then this looks like more a 12 times EV to EBITDA purchase. But if you worked the $360 million that Kumar Mangalam Birla says is possible in the next couple of years. Okay, this table is going with 320 because many analysts are expecting 320. But Kumar Birla gave that number 360. Then it comes all the way down to 7 times EV to EBITDA. But what should we go with? What will the street go with? And therefore, has Hindalco got some more value to be juiced out? Rakesh Arora, managing partner of Go India Advisors, joins us now. Good morning, Rakesh. First, that is the question. Is that a credible assumption to go with, that last year's 201 million, after all the ramp up, will become 360 million EBITDA for Aleris?
Well, obviously you have to take with pinch of salt whatever management targets are. But having said that, even if you look at current numbers, they are doing around $200 million of EBITDA. Yes. Plus, they've invested $900 million into a facility which is yet to contribute meaningfully. So if you put all this together, you come to a number of like 2.3 billion or 2.4 billion. So they might have overpaid a little bit here and there, but given the quality of assets, I don't think it's material enough.
Okay.
Okay. So, Rakesh, good morning. If you think that this $360 million that the management is targeting looks a bit aggressive, what would your own realistic assumptions be of how much the Aleris EBITDA could rise from the 202 million run rate currently?
No, so what I was saying is that, obviously the targets which management gives is to be achieved over a period of time.
Yeah, 2 years this year.
And as an analyst, you are worried more about FY 19-20, and that is where I think I don't have any estimates, but we have to only take an incremental approach because capacities take longer time to stabilize, and these products have a 2-year approval cycle. So it's not that you can add tomorrow.
All right. No, I agree with you, but the calendar 19, of course, that's a calendar year calculation. There, we've got some estimates, Kotak estimates it would be 310 to 325 million, purely because that 900 million capex you're talking about is going to start production. Macquarie is giving it $330 million. and JP Morgan's giving it $344 million, and that's why the EV to EBITDA now is getting worked closer to 7.5 to 8.5 times. But Rakesh, if you are a Hindalco investor or an advisor to a Hindalco investor, what's in it for that company? Do you think that it's got something good in the long run?
Okay, so see, basically, if you look at Hindalco as investment, the business model is changing quite dramatically because Novelis has become now 50% of earnings, and with Alaris coming in, it's going to go up another, probably to 60-65%. And these are convergent business which doesn't have too much of cycle in it. The margins are more stable. You can, more comfortably forecast the earnings. And to that extent, I think a re-rating on the multiple, is possible. Secondly, one was always wondering where the growth will come in Hindalco from here on, because India is not a good destination for making primary aluminium. Maybe they will invest a little bit in alumina, which they are doing in Utkal. But beyond that, there was hardly any growth, and value-added product in India is a slow starter. It will take probably a decade to become meaningful. So this gives you a growth opportunity. So both on accounts of stable earnings and growth, re-rating is potentially possible.
Okay, so what would your own view be on how to approach the stock here on if there is a re-rating? I mean, there seem to be no organic growth drivers. They've perhaps mostly played out. So from these acquisitions, etc., what kind of an upside do you see for Hindalco over the medium term?
See, I don't really cover stock, in that detail, so I won't be able to give you target prices and recommendation. But as I broadly said that, it is delinking from aluminum price per se. 65% of the earnings. People will be comfortable giving a higher multiples.
Okay, higher as in how much higher?
So a primary aluminum producer will get like 6-7 times EV EBITDA. The conversion business can attract anywhere between 8 to 10 times.
Okay, that's a sizable positive.
Okay, so 8 to 10 times. Would you be worried about the way the debt will rise? I mean, the management seems to be quite comfortable with this range, but in your own sense, how would you approach that?
No, so as I said, the earnings are going to be more stable. I won't really worry too much about the debt, and it's going to be focused that in any case.
Okay.
So I don't think, while it looks up on paper a bit stretched, but there's nothing much to worry from a liquidity point of view.
Yeah, they expect it, of course, to come down debt equity to 3 times in a year or two. Thank you very much, Rakesh Arora, for putting that into perspective. And that's an important perspective, that it moves from being a primary aluminum producer to a large extent, more than 50% of value-added products. And they tend to be stable, as Rakesh points out. The primary aluminum metal moves up and down depending on LME prices and raw material price, depending on the aluminum cycle. But how many cans will the world consume because of Novelis? Novelis is a big can maker. Or how much it consumes by way of aerospace products. Those are more stable demand cycles, and therefore Hindalco will get a stabler, will get some points in terms of valuation for being a more stable earnings generator. That's a very important positive, perhaps, for Hindalco. When aluminum prices fall, we are not going to see the same amount of damage in Hindalco prices.
Also, it gives it, a stepping stone into the aerospace segment as well, a segment which everyone expects to grow quite well over the next few years.
And into China. Both Novelis and Alaris are in China, so it opens that market as well. For them. So perhaps many positives coming. We'll discuss this big story of ours and a CNBC TV18 exclusive, and a huge story for India, for the Indian economy, for the stock markets, and for Indian business through the day, and of course get you more expert opinion. We'll take a break on that note. We have lots more stocks to discuss. Plenty of earnings after market hours yesterday, and plenty to discuss for the day ahead. Our top 10 list of stocks in a minute after this break.
Hi, welcome back. You're still watching Bazaar Morning Call. We have a hectic day ahead of us, and the SGX Nifty is suggesting that the day may continue to belong to the bulls, as it has been for the last few days. Our research team is here to tell you about the list of top 10 stocks to watch as we head into trade today. ITC is smoking hot. After a long time, we're at least seeing some volume growth in the cigarette business. Mangalam?
Absolutely. We see cigarette volume growth after a long time, and like you said, Sonia, the day may belong to bulls. ITC will be the one which perhaps will be holding the bulls on one end. Numbers appeared in line, but if you dap the ash and see, there is definitely fire in the cigarette volumes, because it was a growth of around 1 to 2%. Majority of the street was bracing for a 0 to 2% decline. Add to that the FMCG business. That one did well. There was a nearly 10 times growth in the FMCG EBIT year on year, and the revenue growth came in at around 14%. More importantly, the stock currently trades at 27 times, which means it's a 30% discount to the sector average. So perhaps if the street is looking at it, the stock may be well in the green.
All right, thank you very much. And ITC moving in the green is a big help for the Nifty. Carries some weight, you'll have to say. What about Bharti Airtel? That also satisfied, didn't it, Reema?
Yes, Lata, it's a steady performance in a very challenging environment for the industry. So the consolidated revenue growth was a growth of 2.3% on a quarter-on-quarter basis. And this was led by improvement both in India wireless as well as in the Africa business. Consolidated margins declined by 175 basis points quarter-on-quarter. And that's because the India wireless business had weaker margins. So for the India wireless business, the margins declined. And it's the same story. The voice continues to remain under pressure, but data is driving volumes. So voice ARPU, or average revenue per user, has declined by nearly 10% quarter-on-quarter, while data volumes have shot up 40% on a sequential basis. Africa is clearly the bright spot for the consolidated Airtel business. So revenues improved, margins have inched up by 35 basis points. And if you look at the Africa margins in a span of 3 years, it's gone up by 15 to 16% from levels of 20%. It's now close to about 36%. One line, we were expecting a loss for Bharti Airtel, but they've actually reported a profit, and that's on account of an exceptional gain. They've created a deferred tax asset in Africa.
Okay, thanks a lot for that. So that's some telecom. And let's move to pharma now. Dr. Reddy has reacted well to its numbers yesterday. Ekta is here to tell us what came out in the conference call and what brokerages are saying. Ekta.
Well, I expect Dr. Reddy's to probably be a little subdued today on account of the fact that the management has said that Novaring, which is basically an oral contraceptive drug, is probably going to be delayed up to first half of 2019 in terms of a launch. Multiple sclerosis drug Copaxone also will probably see a launch in the second half of 2019. So the adjustment is probably going to come in the fact that EPS estimates are not going to factor in these two drugs anymore, and hence you're going to see that adjustment come in for Dr. Reddy's this for today.
So that's red, is it? Not very good news. We're coming back to you for the big boy Biocon. But before that, Sonal, Petronet LNG.
Good set of numbers, Lata. Strong operational performance. Margins expanded by 70 basis points, and that was versus an expectation of 10 basis points decline. That was majorly led by good utilization at Dahej. That came in at 113% versus an expectation of 109% utilization. Also, the finance costs, they went down 10% quarter-on-quarter and 36% on a YOY basis. Volumes were also quite strong. They came in at 220 TBTUs versus an expectation of volumes of around 214 TBTUs. Brokerages are very positive. Jefferies has increased the EPS estimates by 3%. DB also reiterates its buy with a target price of 305 rupees. Back to you.
Okay, thanks, and for helpfully pointing out that it is trillion British thermal unit. Thanks for that. Ekta, now back to you. Biocon.
Well, largely an inline set of numbers, nothing to complain about. So revenue was up around 20-odd%, led by the biologics business, which was up 36%, which is basically your simple insulin and biosimilar business, as well as Syngene, the research services business, which was up around 39-odd%. Margins at 21%, and the profit was up on account of a low base as well. Same time last year, profit was down 51%. We'll wait by for the conference call at 9 a.m. to get more clarity in terms of commentary from the management.
All right, Ekta, thanks a lot for that. Yes, there's a conference call at 9 a.m. So we'll be hearing from Kiran Shaw. But then let's talk about some NBFCs. A lot of them actually came out with a good set of numbers. SBI Life, Abhishek, how did it look?
Well, Sonia, it's a strong quarter. You look at the value of new business margin, which measures the profitability of a life insurance business. That has increased to 17% versus 16.2% on a YOY basis. The 13th month persistency ratio remains strong, and that has improved to 83.7% versus 83% on a sequential basis. The protection business share, now that jumped by 4.5% on a sequential basis to about 10.2%. So the gross premium, which was up about 26% on a YOY basis, led the net profit growth to being at 13% plus. The AUM growth remained healthy at 19%, so expect a green on the stock today.
Okay. Well, thanks for that, though I'm more interested in listening to Chola and Bharat Financial Coming back to you, Mangalam, Concor.
Well, Lata, Concor revenues were in line. The Exim business did very well for them, which means that the operational performance was a beat. The EBITDA grew higher by about 16%. The margins came in higher by about 200 basis points as well. The net profit growth, though, was limited by lower other income, which came in lower by about 29% year on year. But for more details with regards to volumes, realizations, as well as empty running of trains and double stacking, we'll be joined by the management soon. But suffice to say, operationally, it was a good performance.
Okay, operationally a good performance. Chola Mandalam, a stock that has been a great wealth creator for investors. Let's find out whether they delivered in earnings, Abhishek.
Well, the earnings growth are strong, Sonia, but one key management change is that the MD and director, Mr. N. Srinivasan, has stepped out. So disbursement growth remains strong at 44.5% on a YY basis. That led to AUM growth being the highest in last 2-3 years at 30% on a YY basis. The NII growth came in at 20% on a YY basis, while the net profit increased by 36% to 285 crores. Asset quality remains stable with gross NPA at 2.99% versus 2.94% sequentially.
These NBFCs have a culture of conservatism in their lending, so perhaps a change of leadership will not be taken too unkindly. But Abhishek, Bharat Financial, the numbers that come, what more could you find out about AUM growth and about NPAs?
For third consecutive quarter, Lata, the customer acquisition has remained strong for Bharat Financial. So they added about 5.4 lakh customers even in this quarter. Look at the disbursement. The growth is at 68%, which is the highest ever disbursement growth that I have seen over the last 4 to 5 years. That growth, the AUM growth to be a 6-quarter high, growing by more than 43%. So the net interest margin came in at 11% versus 9.9 sequentially. The gross NPA is almost wiped off. So the gross NPA now stands as just 0.3% versus 2.4% quarter on quarter. Back to you.
Okay.
Oh, that's a brilliant performance.
Yes, it is indeed. But we have some more good numbers actually coming in. Sonal will give us that list. Sonal, over to you.
Thanks a lot for that, Sonia. I'll start with Jindal Stainless Hisar. Good set of numbers, margin expansion of 50 basis points. Also, the finance costs, they went down by 16% on a YY basis and 7% sequentially. Star Cement, however, might not shine in trade today because though strong, the revenue growth was strong at 21%. Margins declined by 1,160 basis points due to higher costs. Finance costs, however, saw some decline sequentially as well as on a YOY basis. Lakshmi Vilas Bank not creating too much Lakshmi. Operating profit was reported versus a loss last quarter. However, they have reported a loss for the third consecutive quarter at 124 crore rupees. That stock should be in red today. Shimaru, however, has reported good set of numbers. Profits were up 22% and 19 crores. That was because the finance costs, they went down by 24%. Expect that stock to do well in trade today.
Okay, thank you very much for that quick summary. And we have 1 or 2 more stocks in which there's news. Anisha, Adani Ports has tied up with GAIL.
Oh, well, yes, I'm talking about something other than earnings, and in a positive move, Adani Ports has signed an agreement with GAIL to tie up capacity at Dhamra Port. Now, remember, this is Dhamra Port is still under construction and it will start only in FY22, so the revenues won't start reflecting anytime soon. But nonetheless, it is positive given the fact that most of the capacity for Dhamra Port is now already tied up, and I believe the stock will react positively to this.
Okay, the stock will react positively. That's Adani Ports. But staying with the big story, here's Nisha telling us the top things the street will watch out for in the Hindalco Novelis Aleris deal.
Hindalco will be in focus after the big announcement of buying out Aleris for $2.58 billion. The 3 important points the stock and the market would be watching out for. First, the synergistic benefit, $150 million to be clocked in the 3rd year of full operations of the combined entity on a recurring basis. Second would be the important commentary made on deleveraging theme of Hindalco. So Kumar Mangalam Birla stated that it would go below 3x in 2 years from now as far as net debt to EBITDA is concerned. That will be important. And the third one is the projection given for EBITDA performance of the newly bought out company Aleris after the acquisition and the consummation of the deal of $360 million, which brings down the overall valuation metrics for this acquisition.
Okay, you heard it first on CNBC TV18 from my colleague Nisha Podar, and that deal has come through. Here's a quick recap of our top stocks to watch today. Stocks with positive news flow today: ITC, Bharti Airtel, Hindalco, Petronet LNG, Biocon, SBI Life, Insurance, Concord, Chola Mandalam, Bharat Financial, Jindal Steel, Jindal Stainless Hisar, I beg your pardon, Shimaru and Adani Ports, while the stocks with negative news flow today, Dr. Reddy's, Star Cement and Lakshmi Vilas Bank, so more gainers compared to losers.
Oh, more.
Yes.
Right.
I guess that's the trend in the market these days.
Well, earnings-wise, yes, it's been good so far, but let's wait and see. We'll take a quick break. We are coming back with our technical experts to